Hey guys, what's up? Alec back with the daily stock market, and look at that. Amazon up 10% after hours after crushing earnings. So make sure you stay throughout this entire video because we're going to be going over Amazon earnings, Apple earnings, and a bunch of other stocks and my thoughts and opinions as well. Jumping right in, we can see that Amazon is up 15% in the last month. Okay, in the year it's down 25%, and it was hanging out at a multi-year low for an extremely long time between $105 and $115 per share, which it was hanging out in 2019 at these prices, in 2018 at the same time. So we saw Amazon at a 3-year and 4-year low for a long time. So the question is, can it hike it back up to $150 per share or even as high as $175 per share once again? If we scroll down, we can see some of my position here. I have around 5 shares up 20%, $20 reoccurring buy. I have about 5 times that amount in my long-term accounts. But more importantly, we'll see a PE ratio of 58, implying it's a little bit overvalued right now. However, it is Amazon, so the moat of Amazon you have to take into consideration. We have a market cap of $1.2 trillion with a 52-week high of $188 per share. Okay, so here we'll see Amazon jumps after second quarter revenue tops estimates. Amazon reports second quarter results on Thursday that beat top line. It also gave upbeat guidance in third quarter, which is always some good news. So we see Amazon shares climbed 11% after reporting better than expected second quarter revenue and gave an optimistic outlook. Okay, so we see that revenue came in at 121 billion, which is a huge amount, and it was expected only 119 billion. So they beat expectations by around 2 to 3 billion. Okay, here's how other Amazon key segments in Amazon performed during the quarter. We'll see Amazon's web service also beat. Amazon's advertising was a beat as well. Revenue growth of 7% in the second quarter topped estimates, bucking the trend among its tech peers, which all reported disappointing results. And that's right. Microsoft, Google, Facebook, all very disappointing earnings. Amazon said it expects to post third quarter revenues between 125 billion and 130 billion, which would be a quarter-over-quarter increase, representing for about a 13 to 17% increase. Analysts were expecting sales of 126 billion. By the way, Amazon did record a 3.9 billion loss on Rivian investment after shares of the electric vehicle maker plunged 49% in the second quarter, end of June 30th. So just in the quarter two alone, they lost 3.9 billion. Okay, next up we have Apple, who's only up 1.1% after hours, not moving much after hours. However, they're up 11% in the past 1 month. And in the past year, unlike Amazon, they're not at a multi-year low like Amazon was. They're actually up on the year. They're up 9.8% on the year. So let's dive into Apple a little bit deeper. Here we see Apple beats on revenue and profit. Wow, double beat. Expects growth to accelerate despite pockets of softness. So this is really good news, not just for Apple, but for the stock market in general. Here we see Apple reported fiscal third quarter earnings on Thursday that beat Wall Street expectation for sales and profit, but showed slowing growth for the iPhone maker. Apple did not provide formal guidance for the next quarter. In terms of outlook, we expect revenue to accelerate in September quarter despite seeing some pockets of softening, Apple CEO Tim Cook says, which is true because in September is usually the quarter where they have their Apple event and they put out all their new softwares and their new iPhones and everything as well. Okay, so we see Apple stock ended up rising 2.5% after hours, and it's probably still going up. So by the time we watch this video, it might be up even higher after hours. So here was the beat that we saw. EPS was a beat. It came at $1.20 versus $1.16 expected, but it was down 8% year over year. The revenue came in at a beat, 83 billion versus 82.8 billion, which was expected, and that revenue is up 2% year over year. iPhone revenue also came in at a beat at 40 billion versus 38 billion expected, up 3% year over year. Service revenue came in at a beat at 19.6 billion versus 19.7 billion expected, up 12% year over year. Other product revenues came in at the only miss at 8.0 billion versus 8.8 billion that was expected, and it's down 8% year over year. Okay, and actually Mac revenue came in a little, it was at a miss too. It came in at 7.3 billion versus 8.7 billion that was expected. That's also down 10% year over year. iPad revenue came in at a beat, 7.2 billion versus 6.9 billion expected, down 2% year over year. And most importantly, those gross margins came in at higher than expected, and there was a beat on gross margins. So all the important things Apple did beat on. They did not provide formal guidance. Okay, we already went over that. Apple revenue rose 2% during the quarter compared to 36% growth during the same period last year. Over 8% growth in March quarter. Chip makers and other computer vendors have signaled that there is a slowing demand for smartphones and PCs around the world as consumers grapple with recession fears and decade-high inflation. Apple's soft growth may suggest that the consumer electronics industry, including leaders like Apple, is headed for a period of slow or no growth. Cook told CNBC that the company is seeing inflation but will continue to make investments. We do see inflation in our cost structure, said the CEO Cook. We see it in things like logistics and wages and certain silicon components, and we're still hiring, but we're doing it on a deliberate basis. Apple's iPhone sales exceeded Wall Street expectations, suggesting the demand for iPhone 13 models remains strong even in the second half of the product's annual release cycle. Apple typically releases new iPhones in September, and sales fall as customers anticipate new models. So keep that in mind. Cook said Apple had success attracting Android customers to become iPhone owners during the quarter that they reported for. We had a record level of switchers and saw double-digit growth for customers new to iPhone, Cook said. The service business was fastest growing segment from Apple during the quarter. It includes monthly subscription payment fees, warranties, search licensing fees from Google, and revenue from the iPhone App Store. Services grew 12% during the quarter, although that's a decline from 17% growth it posted in the second quarter and down 27% growth it reported during the same period last year. Cook said that Apple has 816 million current paid subscription, which includes anyone who subscribes to an app sold on the App Store, the Apple App Store, in addition to the products such as Apple Music and iCloud. Mac sales were short of consensus. Apple's business in Greater China, which includes Taiwan and Hong Kong, declined 1% on an annual basis to 14 billion, Cook said. That result was despite major COVID restrictions that hurt demand and had to close stores. Apple's growth margins exceeded the company's own forecast from April. Apple reported 43% in gross margins, over 42 to 43% range, the company suggested earlier this year. Apple also said it spent $28 billion on share buybacks and dividends during the quarter, which is another bullish thing. And now it looks like we see that Apple stabilizing after hours to around 3% upward movement after hours. Now we also have Roku down a whopping 26% after hours. This is one that I wish I did take a put option out on, and it probably would have been a good idea to, it obviously would have been a good idea to take a put option out on Roku, but you can't see them all coming. That was definitely a big surprise. Kathy Woodstock is obviously getting ruined right now. Roku is one of her biggest holdings and one of the stocks she believes in the most over the coming years, now down 86%. So Roku could be a huge comeback story. And thumbs up this video, comment below if you guys wanted to see a deep dive in Roku, see if it's getting attractive at these $50, $60 price point levels after down 30% on earnings. Intel's also down a whopping 10% after hours, now at a 5-year low. And that's what's so shocking about Intel is at a 5-year low. You know, in 2017, it peaked at around $35 per share. So what did we see from Intel? Intel posts sharp drop in sales, issued muted outlook. The CEO says we must and we will do better. As markets react to inflation and high interest rate, technology stocks are having their worst start to a year on record. Okay, Wall Street Journal explains why the sector, from tech giants to small startups, are getting hit hard. Chipmaker Intel reported lower sales for a second straight quarter and gave gloomy sales outlooks, reflecting a slump in personal computing purchases after 2 years of strong pandemic-era demand. Intel on Thursday said sales in the second quarter fell 22% to 15 billion, missing Wall Street's expectations. It generated a net loss of 450 million compared with a profit of 5.75 billion in the year earlier quarter. So that is, very concerning for Intel to actually be reporting a $500 million loss when just 1 year ago they were reporting profits of 5.7 billion. So that's a huge difference. We have to find what's going on with the disconnect. The CEO says we must and we will do better. So the best thing to probably do on Intel is listen to a few calls with the CEO, listen to a few interviews with the CEO, and find out what their plan of attack is going forward and see if you agree with their plan of attack. Because right now they are a value stock right before our eyes. Intel is honestly doing a lot of things right, and this kind of seems just like a short-term bump in the road. So it could be beneficial to do some of your own research and see if this is a stock that you want to own for a long term. Personally, at $35 a share, Intel is getting very attractive for me, and I'll probably be picking up a few shares at $35 per share and see if Intel can go into the 30s and maybe even to the $20 per share mark. Keep in mind, this is also a dividend stock with a 3.5 dividend yield and a value play at that as well, with a P ratio of only 6.65. Okay, guys, I hope you really appreciate that video. Make sure you like and subscribe with post notifications on, and let me know what you want to see in future uploads. Do you want to see more options? Also, make sure you reach out to me if you want to join the close friends list. I just raised the price on the website, so if you want the original price, make sure you reach out to me, because if you check the website, the prices actually went up. If you do have a link to the website, you can check that out for yourself. If you're new to the channel, make sure you click success number 5 and read some of the powerful results that the program has had on beginning students that are just learning how to trade options and make money when the stock market is either going down or up. Here we can see now is the time to learn a new skill to make money, no matter if the stock market's going down or up. DM me for more info. The Shopify one you mentioned brought in for me huge. You're the man. Took the firm one out on my own, starting to pick up on what you're doing, and I'm learning to identify on my own. My account was down 35% before I started with you, and now I'm getting down to only 10% down. And that's the good thing about this program. A lot of my students are learning how to do this on their own, so they're taking even more puts or calls out on stocks that they think they're going up from what they learned in the program. And so this student, for example, made $650 extra on that trading day, and that's just a recent student too. So if you look at some of the other ones, you can see that there's hundreds of students who are getting these results, and I definitely want you to become one of these success stories yourself. Really want you guys to be a success story yourself, so reach out to me. I'll get you in at the original price of the website before I raise the prices. All right, guys, thank you for all the love and support. Make sure you share with a friend, like the video, subscribe with post notifications. I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.